Hello, my name is Matthew Copley, and we're here today to talk a little bit about some of the loopholes that you can find when you're looking at taxes and you're looking at retirement planning. Some things that people are unaware of that can affect a lot of people. And we talked about previously in a previous video how Social Security is not taxed at many of the state levels, depending on what state you're in. There's 38 states that don't tax Social Security, and so this is a really important loophole that seems to kind of elude a lot of people. They don't know this. And so one of the things that we want to talk about today are some of the other loopholes that sometimes people don't know. And so one of those is, we talked previously about the Roth IRA and how valuable that is. One of the things on a Roth IRA that I think is really important to understand is the distributions are not only state and federal tax free, they don't impact Social Security, they also don't impact a Medicare share of cost. Which is important. Your Medicare share of cost when you sign up for Part B is typically $134 a month at this time of this video, but that increases if your income goes above a certain threshold. And so we want to make sure that you understand that a Roth distribution doesn't count. Some of the other things that a Roth distribution doesn't count is alternative minimum tax. If you calculate your taxes and you have a lot of deductions, and the government requires you to do what's called an alternative minimum tax to determine whether or not you should pay a little bit more in taxes, and all the Roth distributions do not count when calculating alternative minimum tax. So those little things that you don't think about can make a big impact depending on your situation. Obviously, for someone who has a higher income in retirement, those kind of things are important. And speaking of another thing that's rarely talked about and people don't seem to understand how it works, is something called NUA, net unrealized appreciation. And what NUA is this is someone who owns company stock inside of a 401k type plan. And that company stock, and they have to own the actual company stock. It can't be like a stock fund. It has to be the actual stock. What you can do, the IRS has a rule that allows you to potentially extract those shares out of your 401k and only pay ordinary income tax on the cost basis of those shares. And I'll give you an example. I just had someone in my office yesterday that worked for Costco and had a huge chunk, $500,000 in shares in a Costco 401k, and we're going to find out what the cost basis is. We'll make some phone calls. We haven't got that far yet. But if that cost basis is quite a bit lower, what we can potentially do is draw out $500,000 in stock and only pay ordinary income tax on the cost basis at the time you draw that out. I've had several other clients with many other companies, from Lockheed Martin to Caterpillar to SDG&E, different companies out there on Sempra. So what you can essentially do is you can pay ordinary income tax on just the cost basis. So if you acquired those shares inside the 401k at $200,000 and they're currently worth $500,000, you essentially just pay ordinary income tax when you extract it on the $200,000. Now, the additional $300,000 in gain, if you rolled over that stock to an IRA upon retirement, the whole thing's a qualified account. It's all subject to ordinary income tax when you eventually take it out. But if you extract it, now you own that stock in a non-qualified account. And so if you go to sell any of that stock, you're only going to pay capital gains, long-term capital gains, which is subject for most people at 15% tax. So you're going to pay potentially less tax on your sale of those shares. Furthermore, if you hold those shares and you still own some of that stock after you passed away, the beneficiaries of that through your trust would get a step up in basis upon death. So they pay no tax on the gains. And so this is a big deal. And being able to extract some of that stock, this is kind of a loophole. Sometimes we call up these custodians and say, we want to do an NUA transfer or ask about the cost basis. And the person has no idea what we're talking about. And they have to go find a supervisor to get on the phone to talk to us, someone who understands what we're talking about. And so it's a rare thing, but it does come up quite a bit when we're talking about retirement and we're calling up and looking at 401k plans. I see often people that own company stock inside these plans. And there's specific rules you have to follow. Each custodian might be a little different. Each company plan might be a little different. But traditionally, in most cases, you have to draw out all the funds within a specific time frame. And so it's important that we do it the right way, and we understand how the NUA works. And so we can sit down and go over that with our clients here in San Diego. But it's something you need to ask about if you potentially have company stock inside your 401k. One of the other things we talked about previously, and just a reminder on Social Security, is we talked about the restricted application strategy, and we want to make sure people are taking advantage of that loophole. If you were born before December 31st, 1953, you still qualify to potentially take a spousal benefit. If your spouse has filed for Social Security, you can take a spousal benefit, and your own Social Security continues to go up all the way until age 70, and so you can be collecting a bunch of money while you're continuing to see your increase in your Social Security numbers, and then you can essentially collect, it's like collecting free money and waiting for your age 70 maximum benefit. So make sure you're taking advantage of that if you happen to be lucky enough to be born December 31st, 1953 or earlier. So those are some of the loopholes I wanted to cover today, some of the things that we want to talk about that are kind of unknown, and so hopefully you got something out of that. Thank you for watching, and if you have questions or want more information, you can visit our local website, which is financialplannersandiego.com.